Check out the U.S. pot stocks going up in smoke today, even as New Jersey celebrates the first day of non-medical adult use marijuana sales. Adults 21 and over can now purchase up to 1 ounce of cannabis from retail locations across the state. For more, let's bring in Curaleaf Executive Chairman Boris Jordan, live from the Benzinga Cannabis Conference in Miami. Boris, great to have you with us. Curaleaf currently operates 3 locations in New Jersey. So what are you seeing so far? I know it's just the first day. What are you seeing in terms of sales, and how big of a market is New Jersey going to be for you?
Thanks, Melissa. Great to be here. It's a big day today in New Jersey. Yesterday, we saw record sales in New Jersey for 420. Today, we're seeing first day of adult use sales. We've serviced over 1,000 customers till now. We've still got a few more hours to go. You know, New Jersey is going to be a $2 billion market, $2 to $3 billion market. Not in the first year. We think the next 12 months will be about $1 billion. We think after that it'll start to build. It'll eventually get to a $2 to $3 billion market. And with a 30% share in that market, we're feeling very good today with the final launch of adult use in New Jersey.
There's a lot of marijuana out there, and I say that because the industry faces a margin problem, and I'm wondering when that gets straightened out, because even though on paper it seems like this would be a tremendous sector to invest in, it's not one that has done well for investors.
Yeah, but that's not really a margin problem at all. I mean, margins are great. I mean, where else in CPG do you get 25 to 50% annual growth with 30% EBITDA margins in the industry? I think the real problem is federal regulation, the fact that investors today just can't invest in the sector. 90% of the largest investors in the world, long onlys, the biggest investors today can't touch invest in U.S. cannabis stocks. And I think that's been the real problem, and we need the federal regulators to get on top of the issue.
Hey, Boris, it's Tim. Good to be with you in Florida this week, and I think the industry is focusing on the drivers. Let me ask you of the following: some type of a federal, some type of federal progress on legislation, M&A, or really, some type of margin stability. What do you think are the biggest expected drivers for the sector for the rest of this year?
Well, listen, if you walk away from the issue of the stock market and stocks and you look at the fundamentals, as I said, the industry is growing. I mean, Curaleaf last year grew over 100%. We're going to grow 25% this year, maybe even more with the adult use sales coming on a little bit earlier in New Jersey. We're going to be a $1.5 billion revenue company, with a 30% margin. Things are looking very, very good fundamentally in the industry, but we do have a plumbing problem. And the plumbing problem is that Washington's behind the 8 ball on federal regulation. We don't have banking regulation at the moment. Schumer just postponed what everybody knew was dead on arrival, his law. We're hoping what that leads to is either a safe in competes. I mean, Competes Act is being debated now in Congress. The Joint Committee on Competes is 70% for cannabis. So maybe we get a safe banking law in the Competes Act, or maybe we get it in the lame duck session in November and December after the election period. But we do need federal regulation in the sector. That's what's going to bring investors into the stocks. But outside of that, the fundamentals of the business could not be better. I mean, we are growing at double-digit numbers, and our margins are very strong.
Boris, great to see you. Thank you. Boris Jordan
Thank you for being
of Curaleaf. Tim, let's say you can wave the magic wand. What should this stock be worth?
Well, let's be clear also. I mean, I think you've got a case here where a lot of these companies, including Boris's, are actually getting stronger every day, that the broader lateral players, whether they're from pharma, big CPG, can't come into this market. The moat around their business gets bigger and bigger. I think the second half sequential growth that's coming online in the sector, both in terms of new markets opening up and also new projects opening up, is actually massive. So the sequential slowdown, I think, is going to change. It's been a tough investment, and I think a lot of that is some of the technical factors, custodial issues, the inability of big institutional. This is a retail market right now, and unfortunately, there's a lot of noise that comes with that. But I do believe, and I've been investing in the sector for a long time. I run an ETF. I think that long term, the growth and the margins here are things that you're not going to see at these levels, at least in other CPG. It's going to take some time.
So just as Boris said, you need the federal legalization to cross across the finish line for any of these stocks to move. They're treated like drug dealers. You cannot run a business with the way the federal law is situated right now. All of these stocks are down year to date from 20% to 30 to 40% right now. But I think the Congress will have one more shot before the midterms to actually take the social aspect out of the new bill, and maybe they can legalize it on a federal level, and all of these stocks will double, triple, quadruple. They're just waiting for that one federal bullish headline.